whether divestment, which was really the point of these protesters, is an effective tool.
Well, first, I'd like to say that I really do empathize with the protesters. I think what we're seeing is that young people really feel a sense of urgency about addressing climate change. However, I would say that divestment can be somewhat of a blunt instrument. Actually, investors, whether you're an asset owner or an asset manager, we have a range of different strategies that we can use in order to really prompt companies to perform more responsibly. So there's the way that you vote your proxies, perhaps in favor of better disclosure and performance targets for carbon reduction. You can submit shareholder proposals to that effect. And then also actively engaging with companies, whether you're in the public markets or in private markets, that can really have an effect as well. So I just think that the focus on divestment is a bit too blunt of an instrument.
The protesters, obviously, most of them would not have the ability to go mount a shareholder proposal at Exxon or Chevron or whatever, but they could influence, I suppose, the managers of a Harvard Management Company or Yale Management Company to do that.
Correct.
So is that you think is the better way for them to go than engaging in just sort of a broad blanket call for divestment?
Yes, I think it's absolutely the way to go, particularly if you're thinking about Harvard and Yale, institutions that I'm sure have leading scientists in this area who understand climate change and its impact on companies or specific physical risks, et cetera. So I think that the students have a point. They should say, look, I want you to, at a minimum, understand the risk in the portfolio, the risk to the endowment, and I'd like to understand how the endowment would perform under a range of scenarios, and then have you even thought through that? Because an endowment has to be in place so that it can actually fund things like financial aid or capital improvements. So the students do have a vested interest in how these endowments are performing and how they're invested.
Do you find that a lot of people who are invested in ESG funds like your own are under the impression that you do not invest in things like fossil fuel companies? That, you know, ESG actually means that you're excluding companies that don't meet certain guidelines for environmental, social, or governance. Right.
Well, there's a broad range in terms of the ways in which one can implement responsible investing. In our portfolio, we are, in fact, underweight energy. So we have taken that strategic bet. However, we do own energy companies in our portfolio. We also own some utility companies. But I would say that...
And how do you then, pardon me for interrupting, but just because it seemed like the right moment to ask, how do you then choose which ones are responsible enough to be in your portfolio? And how do you decide which aren't, and why do you decide that these are fair for you to invest in to begin with?
That's an excellent question, because we really do rely on fundamental investment research to understand how these companies are positioned, what their strategic priorities are going forward with respect to reducing their greenhouse gas emissions. We really try to identify companies that have specific targets for reducing their carbon emissions, and also initiatives focused around renewables in areas that could be growth drivers that may not actually be priced into the market.
There is an argument to be made that you can make and enact change if you're on the inside, right? If you are actually a shareholder, you can press management to do certain things. How does that argument differ from back in the days when the last big student protest calling for divestment, apartheid, was the issue, when they said, you know, it's time to divest, and that's what management companies did. They divested. They didn't say, we're going to invest in these companies and enact change from the inside.
There really has been an evolution in responsible investing. You're right. I would say that traditionally it was all about what not to buy or what not to own. And really, I think what most investors are focused on now is what to own, meaning what to have in your portfolio that may mitigate some of the risk of climate change or other issues, or in fact could perhaps be leaning into some of the new technologies or disruptive technologies that could be part of a lower fossil fuel future.
So if I'm understanding you correctly, and I think it's a very interesting point, you would use your investors' dollars to try and encourage companies that might otherwise be on a list of you can't go there, to improve their behavior. So you're looking at an energy company that's and any company that's trying to reduce its carbon footprint, is reducing emissions, is embracing renewables, and it could be a fossil fuel company, or it could be a big utility that burns coal and that, or maybe it doesn't, I don't know, I don't put words in your mouth, but you know where I'm going on this.
Exactly.
You'd rather use your dollars as a carrot than your divestment as a stick.
Yes. In fact, we like to use our presence, if you will, as active investors as a catalyst for change and for positive behavior among these companies. You'd be amazed that if you raise an issue with a company to say, look, I'm absolutely concerned about your future cash flow, I'm concerned about how you're allocating capital, and I'm concerned about these other issues, and I'd like to see improvement on all of these dimensions. I've actually found that boards of directors and CEOs and CFOs are very responsive to those types of engagements.
So give me an example in your portfolio, to the extent that you can talk about it, of a company that maybe the folks that were on the field at the 50-yard line at the Harvard-Yale game would say, well, you can't invest there because they use fossil fuels, they burn this, they do that. But you say they are an ESG company because. Give me an example.
Sure. One of our long-term holdings is Royal Dutch Shell. And this is a company that in its communication to investors, and also they back it up with numbers, they clearly articulate what they're doing to pivot in a way that would reduce their carbon emissions in their core business. And also they're making strategic investments in renewables and other areas. And so what I appreciate about Royal Dutch Shell is the fact that they view this as really part of their overall strategic guidance, just as they give guidance around cash flow and dividend policy and everything else. And so that, to me, lends credibility to what they're doing, as opposed to some companies where you might look in their corporate social responsibility report and read one thing, but if you ask the CFO questions about what's in there, he has absolutely no idea what you're talking about. Right. So I think that would be an example.